Inflation came in at 3.5%, way better than anyone expected. Wall Street cheered, yields fell, rate hike odds got cut in half. There's just one problem with that number. By the time you read it, it had already expired. 6 days earlier, and almost nobody noticed. Okay, let me set the scene. For a solid month, this entire market has been terrified of one data point: June's inflation report. Everybody had a theory, everybody had a hedge. Tuesday morning it lands and it's good, genuinely good. Headline inflation drops to 3.5%, down from 4.2. Analysts were looking for 3.8. Core inflation drops to 2.6. And month over month, prices actually fell 0.4%. That is the biggest one-month drop since April 2020, so the reaction is exactly what you'd expect. Victory lap starts instantly. The hiking cycle is over. The Federal Reserve won, soft landing achieved. By everything, the odds of a rate hike in July collapse from about 42% down to 16%. September hike odds fall from around 70% to roughly half. The dollar softens. The 10-year yield eases to about 4.5%. Stocks tick up. And every single one of those moves is a bet on the same idea, that the thing which cooled inflation is going to keep cooling it. So let's actually look at what cooled it. Except, here's what actually happened inside that report. Gasoline fell 9.7% in 1 month. Energy overall fell 5.7%. And core inflation, that's the number with food and energy stripped out, the one that's supposed to tell you what the economy is really doing, it didn't move. Month over month, it was zero. Flat. Nothing. Read those two numbers next to each other because they're the whole story. The economy didn't cool, your fuel bill did. Services didn't crack. Shelter didn't crack. Wages didn't crack. Gas got cheap. That's it. That's the disinflation everybody just threw a party for. And I want to be really careful here because this is where people get sloppy. Cheap gas lowering inflation is completely real. It's not a trick, it's not an accounting gimmick, it counts. The question isn't whether it's real, the question is whether it lasts. So, why was gas cheap in June? Here's the part the celebration skipped. The United States has been at war with Iran since February 28th. In March, Iran declared the Strait of Hormuz closed. That's the channel that carries roughly a fifth of the world's seaborne oil. Oil went vertical. Brent peaked at $126. Then, on June 17th, a ceasefire, a memorandum of understanding. The shooting stopped, the tankers moved, and the risk premium drained out of crude. Oil got cheap, gas got cheap, and that is the junior inflation report is describing. Now watch the dates. That ceasefire collapsed on July 8th. Iran hit commercial vessels in the Strait, the United States struck back, the naval blockade came back. July 8th. The inflation report came out July 14th. 6 days later. Put it together. The report says gasoline fell 9.7%, and it's right. But that measurement window closed on June 30th, and the ceasefire that made it possible was dead by July 8th. Right now, today, Brent crude is back at $84.73. That's a 1-month high. It is up about 12% since Friday. It's about 19% above where it sat before this conflict started. The input that produced the good number has already reversed. It reversed before the number was published. That report isn't a forecast. It's not even a snapshot of now. It's a rearview mirror, and the road behind it already changed. Here's the kicker, the thing that made me want to make this video. In the same week that oil ripped 12% higher, the market cut its rate hike odds in half. Think about what that means. Traders got more relaxed about inflation at the exact moment the single biggest driver of the last inflation reading started going the other way. That's not a soft landing being priced. That's a market reading a stale number and extrapolating it forward. Now let me argue against myself for a second, because if I don't, I'm just another person selling you a scary story. There are real ways this read is wrong. 1. Core inflation is at 2.6% and falling. 2.9 down to 2.6. That's a genuine trend, and it has nothing to do with oil. If services keep cooling, the energy round trip is noise and the disinflation is real. 2. The Strait is not actually closed. Roughly 8.5 million barrels a day are still moving through it under naval escort. If that holds, oil stays in the 80s and never touches inflation again. 3. Oil shocks fade. Even a nasty one washes out of the year-over-year math in 12 months, so this isn't a crash call. I'm not telling you the sky's falling. I'm telling you the market just repriced its entire rate path on a number whose main ingredient has already spoiled, and it didn't check the date. Here's what makes this whole thing almost funny. Somebody did say it out loud. The same morning that report landed, Kevin Warsh, the chair of the Federal Reserve, was sitting in front of Congress for his first testimony in the job. And he said this: there might be some that look at this morning's data and say, oh, mission accomplished, everything is swell. That is not my view. Then he added, we have no tolerance for persistently elevated inflation. Oh, the crowd is positioned for a Federal Reserve that's finished. The guy who runs the Federal Reserve is on camera telling you he isn't. And the commodity that produced the good number is up 12% since Friday. When the positioning, the data, and the actual policymaker all point in 3 different directions, the crowd is usually the one that has to move. So here's the test, and I'm putting a date on it. July's inflation report, around August 12th. If energy swings from minus 5.7% to positive, and headline doesn't print below 3.5%, then June was rented, and the rent just came due. If headline goes lower with energy still falling, I'm wrong, the cooling was real and broad, and I'll say so on this channel. Most expensive habit in markets isn't being wrong. It's being right about a number that's no longer true. So when the data you're trading shows up 5 weeks late, ask yourself what you're actually looking at. The road or the mirror? Tell me below. Earl's full daily brief is on the channel. I'm Frankie, the asymmetric signal. One contra Ryan read a day. Subscribe.